strategy. Okay. Okay, if you guys use Bollinger Bands in your trading strategy, just type 1 in your chat box. All right, I see quite a lot of traders here, or the participants here, using Bollinger Bands itself. Okay, so today we will be going through these 4 different indicators, mainly the volatility indicator, standard deviation, Bollinger Band, as well as average true range. All right, so what is volatility? Give me a minute. Okay, let me just take out my pen. Okay, so volatility is the fluctuation of price or the changes in a security. Okay, the pace at which price move and how wildly they swing. Okay, so the higher the volatility, the wider the range of price fluctuation it will be. So generally, changes in volatility tend to lead to changes in prices. The higher the volatility, the riskier the security itself. Volatility is either measured by standard deviation or other technical indicators. All right, so in the next few chapters itself, we will look at how to measure the volatility. Okay, and the next part is the standard deviation. The standard deviation is a most commonly used tool to measure the volatility. It measures the difference between the actual price and its average value. All right. So the larger the volatility, the higher the standard deviation. And this standard deviation is used to measure the price variation of a security and its relative risk. Okay, let us quickly take a look at how this standard deviation is calculated. Okay, let me just take out my pen. Okay, so to calculate this standard deviation, we need three closing prices. Okay, so there will be a X period of simple moving average. Okay, the default we however use is 20 or 21. In our examples, we will use a 3-period moving average. Okay, so averaging, first we take note of the closing price. So over here, the closing price, let's say this is 75. Okay, this one, the closing price for this candle would be 65, followed by the closing for this candle itself is 55. Okay, so we need to take the average of these 3 closing prices. That will give us an average of 65 itself. Okay, the next step is to determine each period deviation from this average. Okay, our first close is this 75. We need to take 75 minus the average of 65. Okay, resulting in 10 itself. That is why we got the 10 over here. Okay. Next, we need to minus 65, this 65 closing price, minusing off the mean 65, which will give us 0. And lastly, we would take this 55, okay, minus this mean of 65, which would give us negative 10. Okay, after getting all these number, all these three number, we sum them, we add them up using the square numbers. We square them first, then add them together. Okay, so by adding them, it will give us a total value of 200. Okay, so this 200 wise, as we are using we're only using 3 periods, so we need to divide that by the 3, divide the number by 3, so which is 200 divided by 3. That would give us 66.67. Okay, lastly, what we do is we square root this 66.67, finally giving us a number of 8.16. All right. So how do we interpret this standard deviation? Okay, so this standard deviation provides an estimate for expected price movement and hence the risk of a security. Price move greater than standard deviation show above average strength or weaknesses. These moves are used to spot overbought or oversold price conditions. Okay, later on, if we got time, we will go over to the live charts to see how Bollinger Bands and this standard deviation are applied. All right. So next, we will go over to the Bollinger Band indicators. Okay, so this Bollinger Band indicators is like this was named after his founder John Bollinger. He wanted to create a dynamic price channel that follows price movement and accommodate for volatility at the same time. So this is combining, the channel at which the price is trending, as well as, the expansion and contraction of the price action itself. This indicator is made of 3 bands where the upper and lower band are plotted 2 standard deviation above and below a moving average. Because standard deviation measure volatility, bands will be wider during increased volatility and narrow during lesser volatility. Okay, so what it ultimately means is that, let me go to the next slide. Okay, so what it means is that, let me take out my pen. Okay, when the price is okay, just imagine Bollinger Band is like the rubber band on your hand. So when you squeeze it tightly, then you release it, it will expand. So as such, when the price is contracting in a tight range, it will suddenly expand out and become the wider price range. So we can see from here, initially the price was within this range over here. Then after a squeeze, it started its bullish uptrend. Okay, as such, the Bollinger Band also widens over here, we can see. Then after it have completed its move, what happened is that it will tend to shrink back to the normal consolidation range. Okay, so the middle band itself over here, let me just, over here, the middle band itself is a 20 period simple moving average. The upper band is plotted okay, this upper band is plotted 2 standard deviation above this 20 SMA, and the lower band over here is plotted 2 standard deviation below the 20 SMA. All right, so that's how Bollinger Band functions. Let us quickly move on to the next slides. Okay, so this was the squeeze that I was mentioning just now. What happened is that, okay, the squeeze, when standard deviation has a low value, okay, when uh, the bands squeeze and come near each other, implying low volatility. Okay, so when the standard deviation become lesser, what happened here is that the consolidation range become tighter. Then after that, when you release it, the bands will squeeze and it will provide a signal that signal a large move. Okay, either on the upside or a downside. Okay, so a bullish signal is given as soon as the body of one of the candlestick closes above the upper Bollinger Bands. So it's mainly referring to this candle itself, where it closed above the upper Bollinger Band. And a bearish signal is given as the body of one of the candle closes below the lower Bollinger Band itself. Okay, so with that in mind, there were okay. Let us go over to the next slide. Okay, another typical pattern that forms together with that goes well together with Bollinger Bands is the W bottom and the M top. Okay, so what happened here is that let me just take out the pen again. Okay, so W bottom, we can see over here, this W forms in a downward trend and indicate a bullish reversal. Okay, we won't know it's a bullish reversal until what happens, the price, this candle close above this red candle high. Okay, so after it close, it tends to hit the upper Bollinger Band. Then after that, retrace back to the 20 simple moving average itself before continuing its further upside. Okay, the pattern is only confirmed, right, after a move above the last stop. Okay, so over here we can only confirm if confirm a possible bullish reversal only if it close above this red candle itself. Okay, moving on. So just now we have seen a bullish W reversal. Now we will take a look at the bearish M top reversal. So likewise for M top to form, okay, we can see over here. Okay, the price tested the upper Bollinger Band, come down. Okay, come down below this 20 simple moving average. We test the high, okay, as well. We test the high as well as the upper Bollinger Band before facing bearish pressure and coming down again. Okay, so now we can see that the price action closed below the previous low as well as the 20 simple moving average. Okay, then after that it came back to retest this upper Bollinger Band. before going further downwards, before facing bearish pressure to go further downwards. All right, so this is also similar to W bottom, where we need to wait for the price confirmation above this previous low. Okay, moving on. Moving on, so how do we measure the price target for the Bollinger Band itself? It's rather simple and straightforward. So Bollinger Band itself, okay, okay, so what happened is that wherever the price will tend to move from upper Bollinger Band to the lower Bollinger Band. Okay, then you can see over here is on a uptrend. Then within this Bollinger range, after that, when it faces bearish pressure and pull back, right, it will pull back to the lower Bollinger Band itself. Followed by, after finding support, it will bounce over to the upper Bollinger Band, followed by moving down. Okay. So what it means is that if the price move above this 20 simple moving average, okay, like this candle, the target for its upside will be the upper Bollinger Band itself. Okay. Likewise, if the price broke the 20 simple moving average, okay, and close below, its price target will be the lower band of the Bollinger Band itself. All right. So that is what the price target means. All right. So going forwards, let us go over to the next slides. Okay, next on this slide we have the so-called jargon for bullish trend continuation. So we call this walking the bands. Okay, it simply means that when the price action broke out from this Bollinger Band, it will follow the upper Bollinger trend line. Okay, you can see from here, once it broke this this high, let me just draw it properly. Okay, the price has been following the upper Bollinger line, then coming back to retrace and retest this breakout support level. After that, continuing its bullish momentum. Okay, we can see very clearly that the price action is always near the upper Bollinger Band itself. Okay, so the nearer the price action to the upper band itself, the stronger the bullish trend itself. All right. Okay, so we can see the price pullback. Okay, bounce again and broke this 20 moving average, 20 simple moving average. Okay, so once it breaks, it have a high chance of going down to test the lower Bollinger Bands. All right, so far we have gone through Bollinger Bands as well as standard deviation. Do you guys have any questions so far? Okay, if you guys get any question, don't be shy. Just put them in the chat box. I will try to answer as quickly as possible. If I'm not sure, I would find out and get back to you all. But Okay. All right. So if there is no further question, I will move forward to the next indicator itself, called the average true range. Okay, average true range, or ATR in short, is another volatility indicator that was developed by J. Wells Wilder, using volatility formula based only on the high and the low range. Will fail to capture the volatility from price gaps. Okay, this is why Wilder create this average true range to capture the missing volatility. The average true range does not provide an indication of price direction, just the volatility itself. All right. Okay, so this average true range, from its usage itself, is it's more catered towards the equities where there are gaps. Okay, where when there are gap up and gap down. In forex market itself, there are lesser of these gaps. Okay, so this is mainly used in forex just to measure the volatility. All right, just give me a minute. Okay, so I have let me take some time to answer a question coming in from Ismail. Okay, Ismail, what is the best deviation value? Okay, so the best part of this deviation value, right, is we don't need to calculate it manually. We can just input the the values inside the trading view. All right, Ismail, I will go through some of the how to use this deviation and this Bollinger Band on the trading view later. So do tune into that. All right. So after this presentation, we will go straight over to the trading view to have a look at it. All right. So how to calculate the true range value itself? Okay. So this true range is defined as the greatest of the following value. Okay, so we have three types. We either use this current low minus the previous close, which is current low minus the previous close, or current high minus previous close. Okay, current high, which is here, minus the previous close. And lastly is current high minus the current low. Okay, so in a ATR, right, we will take the greatest of either one of these three calculations. Okay, so how do we interpret this ATR itself? Okay, high ATR values can warn traders of potential market tops and bottom. So this is quite useful in some sense, but we can't solely just depend on the ATR to have a to mark out the tops and bottom. This low average ATR can also indicate ranging markets. All right. So many traders use this ATR as their initial stop loss also. A bullish reversal with an increase in ATR shows strong buying pressure and reinforce the reversal. Okay, a bearish support break with an increase in ATR also shows strong selling pressure and reinforce the breakdown of the price action itself. All right, after going through all the indicators, now we take a look at how we use those indicators in different price actions. Okay, so over here we shall see some squeeze signals, some reversal signals, alignment signals, as well as to exit signal to exit your position. Sorry, apologies, just give me a minute. Okay. All right, so firstly, we see a bullish squeeze. So bullish squeeze, what that means is that, let me just take out the pen again. Okay, we see over here, the price was dropping. Then after that, it found support. It bounced back to the upper Bollinger Band. Okay, over here, all this consolidation, and okay, with this tight consolidation, you can also see that the Bollinger bands itself, the upper band and lower band, are contracting very tightly. Okay, so when the bands itself, the distance is very near. Okay, we will sort of have an idea that the price action is going to squeeze either to the upside, okay, or the downside. Okay, so the band become narrow and come near each other, implying low volatility. Okay, so the second condition is the band loses their slope and become flat. Okay, the sideways consolidation, forming a sideways consolidation between the bands. Okay, a bullish candle close above the upper Bollinger Band, which is here. Okay, so once the price action signals that candle closes above the upper band, right, there could potentially be a further bullish upside. So this entry signal is activated above the highs of the candle that generated the signals. All right. For this okay, for this entry signal, I'm a bit subjective to it. Okay, because after some back texting, what it usually does is that it does not it does not give me a clear how should I put it. Okay, simply put, this one needs some back testing from different traders to see which time frame you are more comfortable with. For a smaller time frame, I find that it's not so reliable, but for a larger time frame, it's more reliable. Okay, so this one, this entry signal, do your own due diligence before taking this into account. Okay, and the stop loss itself can be placed below the bottom of the consolidation area. So what this stop loss is they are referring to is over here. So if the price come back to test this support level, that will be the stop loss. Okay, same likewise for the stop level. I'm also quite subjective, so this one need proper back testing. It works out better in the higher time frame. Okay, for a smaller time frame, it's quite subjective. So do take note of this entry and stop loss criteria. All right. Okay, likewise for bearish squeeze, it will be the opposite of it. So what happens is that the bands become narrow. Okay, it become tighter over here, implying that there is lower volatility as well as sideways consolidation. Okay, then after that there will be likewise a candle that close below the lower band itself, signaling a possible bearish trend going to take place, right? So over here, the entry signal also indicates to take the short trade after it breaks the low of this candle. All right, and the stop loss will be if the price come back to test the upper price consolidation area. Okay, likewise, these two criteria is also quite subjective and require the some back testing before you all are comfortable with it. All right. Okay, so the next one is the bullish reversal. Okay, so in a bullish reversal, if you guys trade long enough, you guys will notice that every time there is a possible bullish reversal, there tends to be a price of W pattern. Okay, you can see over here the W pattern form nicely over here. Okay, before the price move higher. Okay, so the condition is a bottom is formed with a close below the lower Bollinger Band. Right, so there is a the previous low here, then after that the second low, it could be at the same length, or it could be lower than the previous lows itself. Okay, so over here in this example, the second low is lower than the first low, and it went down to touch the Bollinger Band. Okay, before bouncing up. Okay, bouncing up to the upper Bollinger Band, there was a breakout. Then the price pulled back to the 20 simple moving average before continuing higher. All right. So all these are in a ideal situation, but when it comes to live trading, it's it needs more of a, it's not as simple as we think. Okay, it requires some back testing, and it requires some patience for the price action to play out. All right, so likewise for bearish reversal. Okay, bearish reversal, instead of a W, it will form a M top pattern. Okay, the M top is here, followed by here. Okay, the M top pattern happens because you see over here the price face resistance at this level. Okay, price pullback and retested this level. Okay, so sometimes if you guys notice, this is also called a fake breakout. Okay, fake breakout, where the institution try to fake breakout with this candle, causing a lot of investors to go long. Then after that, they move it to the opposite direction. Okay, so what happened here is that it's a complete opposite of a bullish reversal. Okay, so when it comes down, the price action touches the lower Bollinger Band. Okay, you can see from this candle, it breaks below this lower Bollinger Band. Okay, come back up to retest this 20 simple moving average before going down, before continuing its bearish trend itself. All right. Okay, let me just take some time to answer questions from Miyu. All right, Miyu. Yes, for higher time frame, I'm referring to H1 and above, is more for higher time frame. The lower time frame, I'm referring to those like 15 minutes, 30 minutes, or even 5 minutes. Okay, so a bullish alignment is a signal that is given when the following conditions are met. Okay, so the first condition is, what is the first condition? Okay, strong bullish move with successive close above the upper Bollinger Bands. Okay, so what it means is that the consolidation start from here. You can see the bull flag. Okay, and the price breakout. Okay, there are there are, you know, continuous green candles which are closing above the upper Bollinger Bands. All right, so once it come to a resistance level on a higher time frame, what happens is that it will pull back to the 20 simple moving average. Okay, then this is the first leg. You see the retracement here, then continue its bullish momentum. So there is another pullback here to the 20 simple moving average itself. Okay, so after you know after facing support level over here, it bounced. Then this entry signal comes after it closed, the price closed above this previous red candle. All right, and the stop loss wise, it can be placed below the recent low, which is the over here. All right. And we see over here, the price continue its upward bullish momentum. Likewise for bearish alignment, okay, this bearish alignment needs successive close along the lower Bollinger Bands, also called the walking the bands. Okay, some condition needed here will be, wait, let me just click it over. Okay, a rally followed by a close above the middle band itself. Okay, then after that, a bearish candle close below the middle band. Okay, over here, we see a bounce to the 20 simple moving average, pullback. Okay, the entry signal is activated below this low of the candle that generate the signal. Then after that, putting a tight stop loss at the previous highs over here. Okay, we see that the price continue its bearish momentum over here in the Bollinger Bands. All right, last but not least, the bullish and bearish exits. Okay, so bullish exit meaning if you guys let's say you are long from here, okay, all right, then you write all the nice price action up, the bullish trend up, okay, this method itself will give you an indication of when the price when the trend is changing and when to close your long trade itself. So this could be one of the way that you utilize during your for your trade management. Okay, so one thing is that okay, we can continue over here. The price action continue is bullish trend. Then after that, price pullback. Okay, then after make a bounce. Okay, but this bounce, notice that this bounce didn't go above the previous high. Okay, and it came back down. Okay, so firstly, you take note that you note that over here there is a change of market structure. Previously, it was making higher high, higher low. All right. So over here you can see the price, this green candle itself was not able to make higher high. So you by right you should already take note that there might be a there might be a change in trend. Okay, so using Bollinger Bands, okay, this method itself, if the price close below this 20 simple moving average, okay, you can consider to close out your long trade because the market structure have changed, the momentum has changed, and it could potentially pull back and change it into a bearish momentum. Right, so that is a example of a good strategy, I would say, to and trade management to exit your long trades. Okay, likewise, for bearish exit, it will be the opposite of it. Okay, bearish exit, we can see that the price is dropping, making lower high and lower low. Okay, so those that trader that took a short position will write down nicely with profit over here. Then when the price start to bounce, right? Okay, start to bounce, you need to take note of it on whether there is a change in market structure. So over here, previously it was lower, it was making lower high, lower low, but over here, after the pullback, it was not making any lower low itself. All right, so this is where a trader would be very cautious about their short trades. Okay, so over here, just as expected, okay, the price tested the lower Bollinger Band before making a reversal above this 20 simple moving average. So once the price closed above this 20 SMA, okay, the tendency of continuing its bullish momentum is very high. So once traders see this signal, they will close out they will take profit on their short position. So that is an example of how we use bullish and bearish exit using the Bollinger Bands. All right, so far, do you guys have any questions? Okay, with that, we have come to the end of this this educational webinar slides. Do you guys have any question on this topic? All right, I see that not much people have a question on this webinar slide. So let us quickly go over to the live charts itself. All right, so let me just give you show you how you guys can make use of these Bollinger Bands and other indicators over at the trading view. All right, so if you open up the indicators tab, search for Bollingers. Okay, it's right over here itself. Okay, so if you click it and go to setting, you will have the length. Okay, this length is the simple moving average that we went through just now. So we will use 20 for now. Okay, the source, this source is referring to the price action. It will be on the close. Okay, standard deviation is now, okay, this answer is for you. So standard deviation, the best standard deviation would be 2. Okay, and the offset we put it as 0. Okay, just to show you guys, right, this 20 simple moving average is the same as the one you all usually use for the moving average itself. Okay, so over here I just open up this moving average of 20. Okay, and if I open up the Bollinger Bands, okay, it shows me the same moving average. All right, so in other words, this this Bollinger Band 20 moving average is the same as the calculation of the simple moving average. All right. Okay, so over here I have a chart of euro dollar just to give you let you guys have an example. Okay, now let me just quickly go down to the daily time frame. Okay, daily time frame, let me just scroll a bit. Okay, let's look at this price action in this area. Okay, let me just box it up for you. Okay, you can see over here the price, euro dollar price came down to test the lower of the Bollinger Band, lower band, then bounce. Okay, uh, the price bounces, but it does not go straight to the 20 moving average. Okay, that's the reason why just now I mentioned that is sort of subjective. Not always the price after the price bounce, it will go back to the 20 moving average. Sometimes it would just flirt with that moving average itself before coming down. Okay, but nevertheless, after it come down, it found support at the lower end of the Bollinger Band. Okay, before bouncing up, you see over here. Let me just stick out the pen. Over here, it closed above. Okay, so what just now we go through, if the price close above 20 moving average, it tends to continue its bullish momentum. So over here, we see two of the things that we learned just now in play. The first is the W pattern. Okay, then secondly is the candle close above this 20 moving average, and thirdly is the uh the 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 price closes above previous high. Okay, so if the price close above previous high, okay, it tends to have a bullish momentum. You can see over here what happened. Okay, let me just extend this box. Okay, so after hitting this upper Bollinger Band, the price continue its bullish momentum. Okay, the near the highs of the upper band. Then when it pull backs, you see the area over here that it bounced is exactly the breakout level of this W pattern itself. Okay, if found support here, then it bounced off to the upper band itself. All right, so this is somehow a very good example of a Bollinger Band. Okay, likewise, if a Bollinger Band, if you use it together with other common indicators like RSI and stochastic, it will be more powerful to determine whether that level is a strong or resistant level. Okay, let me just give you some example. I've opened up the RSI and stochastic over here. Okay, RSI and stochastic I've opened up. If you guys see, okay, first let us take a look at the RSI. So RSI, you notice wherever the price fall to this level, the price tend to bounce off. For around this 34.68, the price tend to bounce off of it. Okay, so knowing that, if we go back to the price action itself, we notice that over here, the price come down to test the lower Bollinger Band as well as touch the support level of RSI. So there was a bounce over here as expected. Then after that, then the second one, the price came back. Okay, when the price came back, it touched the lower band itself again. At the same time, the RSI is also at the support level. Okay, hence giving us a more the more conviction that the price action is going to reverse and have a bullish reversal. All right, so RSI is one thing. Another thing is the stochastic. So stochastic, over here, there tends to be two support level in stochastic. So let me just use one of the example. Okay, so the support level in stochastic we have over here is this 3.25 area where if the price can come down, if the stochastic come down to this level, there uh, there was a bounce in the previous instances, okay, previous occasions. So over here is come down near and the price bounce. You see over here, okay, over here itself, the price is the price, okay, come down to this lower Bollinger, as well as the price action is also as stochastic and it bounce. Okay, previous two instances also the same. Price come down to the lower Bollinger. Okay, the stochastic is also at support level, therefore it bounce. Likewise, if we go back earlier, okay, the price over here is at lower Bollinger Band. Stochastic is at support, therefore it bounce. Right. So what I'm trying to say at the end is that okay, if Bollinger Band can use together with other stochastic or RSI indicator, uh, it will provide a stronger support and level. Okay, it it will show you that whether the level is a stronger support or resistance level. All right. Okay, last example I would like to give you guys before we end this webinar is on the Bitcoin. Okay, on a Bitcoin, let me just off the RSI and stochastic. Okay, so if you guys are into crypto, you will notice that crypto prices tend to be more volatile. Okay, more volatile meaning that it can have very high swings and it can drop very quickly also. Okay, so as such, Bollinger Bands is a very good indicator to that can be used to analyze the crypto market itself. All right, and we can see from here it sort of obeys the Bollinger Band very nicely. Okay, so let me just show you some examples. Okay, so over here, let's see from the start of the bull trend. Okay, you see the price action is very near to the upper Bollinger Band. Okay, when it came to retest, it break the 20 simple moving average, just keys around this lower Bollinger Band before continuing its bullish momentum. All right, so we can see the price action only in most of the price action obeys the upper Bollinger trend line, okay, where the price is below this Bollinger Band itself. Okay, but in some instances, we can see that the price action close above the upper Bollinger Band. Okay, so then pull back to 20 moving 20 SMA, then to the lower Bollinger Band. Okay, so at the end of the day, Bollinger Band, okay, even if we take a look at the last week Bitcoin crash, okay, we can see over here just before the crash, there is a green candle that closed above the upper Bollinger Band. Okay, so the upper Bollinger Band, as we all know, it provides sort of like, you know, the maximum price it can go above before hitting resistance. Okay, so there is like a resistance level. So once the price broke above, we can see over here, this upper Bollinger Band is like 2 standard deviation above this 20 SMA. So once it close above, it tends to have resistance and bearish pressure. That's why it dropped. Okay, but that is not the main reason why. There are other factors that cause the drop. I'm just showing you some, you know, some. You can use the Bollinger Band to determine whether the price is overbought or oversold. All right. Okay, with that, I've come to the end of today's educational webinar. Do you guys have any questions on this Bollinger Band and other indicators that we went through today? Okay, if there are no other questions, thank you guys so much for joining me in this webinar itself. Do register for our other webinars on a daily basis. So tomorrow is our exclusive webinar. Where we will be going through fundamentals as well as technicals. Prepare your pair, prepare the pairs that you guys would like us to have a look. Okay, so stay tuned. We will see you guys again tomorrow. Thank you and goodbye.